Orange County Housing Report. We're pretty fortunate to get this. We get this every 2 weeks. It's written by Stephen Thomas. It's a very micro report for all of Orange County. This is this part that you were talking about this morning.
Yeah, so I like this one because it's called Housing Reset. And basically what this means is it says here, Housing Reset. In June, the Federal Reserve announced that they had plans to reset the U.S. housing market. And that is precisely what is occurring today. And that's 100% true. So basically what's going on is they decided that they need to cool the market off. The chairman of the Federal Reserve, Jerome Powell, said, okay, this is what needs to happen. I'm going to go through the list. He basically said, I want to end to the swift rise in home prices so they stop selling way over asking.
Yeah.
We need supply and demand to get better aligned so that home values don't continue to skyrocket. And then also help bring home prices more in line with rents and other housing fundamentals. And in order for this to happen, we have to go through a correction. And that's exactly what we're seeing. We're seeing balance be restored right now.
Well, they brought the rates down to historical lows pre-COVID, or right when COVID happened, and that stimulated the economy. And so now that we're sort of out of those woods, what can we do to reset it? Let's raise the rates and bring back some normalcy, right? So they obviously have control to do that, and that's exactly what it looks like they're doing. In economic terms, a correction typically means that home values drop between 10 to 20% from their peak. Their peak occurred in May of 2022, which is in alignment with where is what we've seen, right? Because we saw rates. I mean, there's a chart here that talks about the interest rates here, and the interest rates look like they started rising.
Yeah, from January till now, what's the difference? Like from low threes to like over 7 now?
Yeah, so in January we were at 3.25, and today we're about 7 to 7.25.
Yeah, and it's like a couple thousand.
Oh yeah, in terms of difference in monthly payment. So the example it has here is if you have a $900,000 mortgage, in January at 3.25, your payment will be $3,900.
Okay.
Today at that interest rate, 7.08%, you're looking at $6,036 a month, which is a $2,100 delta.
Jeez.
So for the same mortgage amount, 10 months later, you're looking at $25,000 more per year because of the rates. And by the way, this is the largest increase in interest rates basically in the history of interest rates going up in any given year. I think the last time it went up anywhere near as much as it's gone up this year was in the 90s.
Yeah, I think it might have been 80s or the 90s. It's been a long time, but we've never seen it jump so crazy and sharp like it has. And one thing also I do want to point out is, I know there's a lot of talk about like, oh, what's going to happen? Is the market crashing? All that. It's always a conversation, right? Like it's always like there's doom and gloom. Is the market going to crash? To put it in perspective, like before COVID, the 3-year average of homes on the market this time of the year was around 6,000. Okay, and right now in Orange County, we're sitting at about 3,700.
Yeah.
So there's a lot of homes that are not for sale still. So there's not a gluttony of homes still, which is what you will see when prices plummet, right? So we're going to see a correction. We're seeing a correction, but at the end of the day, it has to correct, right?
It has to correct. Look, over time, long term, real estate prices will continue to rise. But if they never go down, then no one can ever catch up. So there's a cycle around real estate, just like there's a cycle around stocks and cryptocurrency and all that stuff. So it goes up and down, but over time, it goes up more than it goes down. And now to anybody watching, you might look and say, well, 10 to 20% decline might sound like a crash to you, right? But this article here specifically says that that's just a correction. And for anybody who's experienced the last 2 years, we saw 40% appreciation. So even if we drop, let's say 30% in 2023 or 2024, we're still a net appreciation of 10%, right? So over time, real estate continues to rise. So it just needs to happen for homeownership to continue to stay affordable for people.
And there are some positives to it too. I mean, think about this, like a nice fun stat is that we were in March, I believe it was, where the average days on market was 19 in Orange County, 19 days. And that's still long. Some of it was like 3 to 5 days, right? It was crazy fast. Now it's ticked all the way up to 87 days on market. So it's like 3 months. It's a substantial jump, which means you can take a look at a home. You can go talk to your spouse or to your family. You can think about it over the weekend, maybe even a week or two, and then potentially go back to that house and put in an offer and negotiate on price and get an escrow and negotiate credits and repairs.
Yep.
I mean, all these positives are coming out of the market. Affordability, obviously it has to make sense for you if you can buy or not, but the market has slowed down, and I think it's a little bit healthier for everybody.
Yeah, and you just said too, affordability. We talk about this a lot. We talk about buying a home. It's just math and motivation. If the motivation is compelling and the math works out, then it might be the right time. The one thing that I definitely wanted to address now is that the narrative out there that the interest rates are at 7% and that it's not a good time to buy, it may not be a good time to buy, okay? But it's not a good time to explore your options. Right? And that's what we try to express to our clients is, yeah, 7%, trust me, we get it. That's way higher than it was 3, 4, 5, 10 months ago. We know that. But if you want to buy, talk to a lender, figure out whether or not you can afford to buy. And if the numbers work, then go for it. And if they don't work, then come up with a different plan. But just saying, oh, I heard the rates are high, so it's not a good time to buy, I'm not going to try. It's just not the right move.
There's a lot of options out there. But
Lots.
Number one is exploring your options, right? You got to at least check it out, see if it makes sense. If it doesn't make sense, it's not the right time, it's not the right time. But like you always hear us say, we don't have a crystal ball. We have no idea what the future is going to hold. What if the rates go back down and the market catches fire again? Do you want to be in that market?
Yeah.
Or do you want to be in this market?
It's always easy to look back and say, I wish I would have. And the reality is no one is ever going to be able to predict the future. So you have to do what's best for you based on your resources at that time.
Yeah.
And that's all you can do.
Real estate's a long game though. Like unless you're like an investor or you're a flipper or like you're a calculated person that's buying a property to hold it for a certain amount of time, like real estate's a long-term game, right? Like nobody that bought a house 30 years ago at a 14% rate. Now I know that there's a lot of factors that vary, you know, cost of living and all those things, but they're sitting on a gold mine now today. Right?
Totally.
Because they bought a long time ago and they sat on the property. And it probably went through 1, 2, 3 cycles since then.
Well, I just closed on my new primary residence about 5 weeks ago. And of course, I don't want the value of my home to fall. But even if it does fall, I don't care. I'm not moving anywhere in the next 5 years or 6 years or 7 years. I mean, maybe I am, but I don't have any plans to.
Right.
So like, I'm not so caught up in what is my home worth right now because it's a long-term investment for me and it's somewhere that I live and I gotta pay rent to stay somewhere anyway. So might as well pay my mortgage and build equity over time and have all those tax benefits. So, you know, for the average buyer that's looking to buy for primary use, I think the best advice I could give you is stop thinking like an investor and start focusing on the real reasons why you want to buy. And if the motivation is compelling and you get connected to a great lender and that lender gives you options for financing that fit into your bucket, then let's make it happen.
Yeah.
You know? But the whole narrative of like, oh, it's too expensive or oh, this, I'm just going to give up. I'm not going to play the game and I'm going to have a pity party. Like you're just not going to win.
Yeah.
Winners don't whine. Winners win.
And I always ask the same question. I think I asked it to you in our last round. What is the interest rate on rent?
It's 100%.
It
You're
is.
getting nothing for it. You literally are paying your landlord's mortgage.
Yeah.
So this was a great report.
Yeah, I agree. And it's always nice to see, and you know, people might skirt around the fact that the market has changed or, oh, it's going down. And I mean, like embrace what it is and find the opportunity. And this market's resetting. Where it's going to stop, we don't think it's going to bottom out or crash, but there's going to be changes to come. And if you're a buyer, if you're a seller, it might mean something different for each of you. Obviously, if you have questions, we're always here to help.
Yep, absolutely. If you want a copy of this report too, we can always share these reports.